What are the questions that Europeans frequently have about their money, and what kind of situations do they find themselves in? Hey guys, it's Johnny. As someone who lives in Europe and has lived around different countries, I know how personal finance in different countries can be quite different when comparing one country to the next. And I'm always curious to see how things work in other countries and see what kind of questions people living in other European countries have when it comes to their money. And so in today's video, we're going to go onto Reddit, an online forum, and we're going to look at the EU personal finance Reddit, which is where Europeans can ask questions about their money and get answers from other contributors in the Reddit community. So the way this is going to work is that I'm going to look through the Reddit, I'm going to pick out a few questions, I'm going to give my thoughts, and then we're going to look at what people in the comments are saying as well. Just a disclaimer before we get started, of course, anything I say in this video shouldn't be taken as financial advice, it's simply my opinion. And as we go through this video, this is my first time looking through the Reddit, I haven't looked at anything in advance, so you're going to get my raw, fresh thoughts as I read them. Now that that's out of the way, let's get right into it. Okay, so this is a good one to start with, and the question is dividends US versus EU. And so the Redditor asks, as an investor based in Europe, brackets the Netherlands, I'm wondering if there are any downsides to investing in dividend-paying companies in the US compared to European ones, or do we as Europeans have any advantage of buying the EU companies over the US ones? So there are a few different factors that come into play here when you think about this. Generally speaking, if you think about dividend aristocrats, dividend kings as companies, if you look through that list, the majority of companies that you'll see in that list are US-based companies. Now, what is a dividend aristocrat or a dividend king? These are companies that have basically either consistently increased or kept their dividend stable or not missed a dividend payment in a period of 25 years, if I think off the top of my head. So in terms of US dividends, you generally have that going for you if you pick a dividend aristocrat or a dividend king, that you're probably more likely to find one over there. However, at the same time, you've got to consider the possibility of double taxation. Now, you're investing in US companies from a European broker, you generally have to fill out a W-8 form, which is a form that exempts you from dividend withholding tax in the US as a non-US resident, basically. But even with that said, the majority of countries in Europe do have a double taxation agreement with the US. The majority of EU countries have double taxation agreements, probably the most notable ones that don't, being Malta and Croatia. So it's only going to really affect you probably if you're in one of those countries. Now, another thing that we might want to talk about from the EU perspective is perhaps if there are tax advantage accounts. For example, I've talked about this when I've talked about personal finance in France, the PEA account in France. And that essentially allows you, if you're a French resident, to invest in European companies and get kind of a capital gains tax exemption when it comes to selling. And if you're investing in French companies, then you essentially get a complete exemption on dividend tax. So if you're living in France and you have a PEA, then it could be advantageous to invest in European dividend paying companies. There we go. All right, let's see what Reddit has to say about this. Let's see. So one user says, depends on the total dividend tax you pay. This depends on your fiscal situation, your tax residency, where the company is located, and the double taxation treaty between both. Generally, if you can buy an NL ticker, it would be more beneficial compared to the NASDAQ ticker of the same company for you. Someone else says, ignoring tax implications, which may or may not be relevant to the Netherlands, there's always some additional short to mid-term currency risk due to euro-dollar fluctuation. Even though those two particular currencies tend not to deviate that much. That's very true, something I didn't think of as well. Indeed, if you're investing in US companies, then when it comes to the capital gain side of things, because of the euro-dollar fluctuations, yes, there will be some currency risk exposure were you to close out that position in the short to medium term. Okay, so the next question is about the best euro fixed term saving rate, and the Redditor is asking if it is in Estonia. So they say Estonian banks offer 4.5 to 4.6% interest rate for 12 months fixed term euro savings. For most banks, it's available online for all EU citizens. Capital gains of a non-resident are taxed in its home country. Am I missing something, or Estonian banks are the best option for fixed term euro savings in the EU currently, i.e. home bank or in-bank or Swedbank? Thanks. Now, I'm not necessarily going to go into the specifics of where the best interest rates by country are here, because actually for about 1 year now, I've been using an online platform called Raisin, which is a EU-based platform. And Raisin essentially allows these banks to open up their offer to clients across other EU countries that are not necessarily the same as the country of the bank, giving them access to higher interest rates in savings accounts and deposits. So having a quick look at the offers I can see in my Raisin account, I can see savings rates up to 4.4% across multiple different European countries such as Italy, Portugal, Lithuania. Estonia is in there as well, about 4.15%. I've got France in there. And so the good thing about Raisin is that rather than having to scour individual banks' websites to find the best offers in Europe, I have them all in one place here, and I can pick out the one that works best for me. And so if that sounds good, guys, check out the video description. I'll leave my sign up link there for you if you want to go and check out Raisin. Let's go and see what other people said about this. So Estonian here just opened up a 1-year deposit for 4.5% with LHV. Opening an account as a non-resident can be difficult though. As I understand, Estonian banks are quite active on Raisin, if that helps. There you go. So another person knows that Raisin is a good place to go. And then OP, the original poster, said 4.5% per year without any risk. Deposits up to 100K is guaranteed by the state. Seems like a very good opportunity because I guess inflation will go down eventually. And yes, I think in the current economic climate, yes, probably inflation will start to go down soon in Europe. And for the duration of these deposits, where the interest rate is the way it is, then it is a fairly good deal, because going back to, the first post we looked at, probably a typical dividend yield in Europe could be about 4 to 5% or even lower. But again, it all depends on the duration of the deposit, how long that is, and how long you can keep drawing that much guaranteed interest from your deposit. Someone else says 4.6% on a 12-month deposit is indeed quite reasonable. However, Home Bank seems to only cater to persons or people with an Estonian ID card. Couldn't find any evidence how a non-Estonian resident could open up an account easily. Looking for my residence, brackets Germany, there are all sorts of similar conditions available through various banks and account brokers. The best conditions from here are the banks in Portugal, Italy, and Lithuania. At the end of the day, I think all over the Eurozone conditions are not so different. Yes, you can see, though there are good interest rates across the rest of the EU, it's not necessarily straightforward to live in one EU country and open a bank account in another EU country if you're not a resident, that is. And looking at the list of countries in that commenter's post as well, you can see we saw them all when we looked through the offers in Raisin. All right, let's have a look at another one. So, question about taxation on cryptocurrency. So I bought some crypto a few years ago and never declared them in my country, Italy. Since I was young, I never had to pay taxes and there weren't crypto regulations. I'm now about to move abroad for work, Spain, and I'm now wondering what I should do with my crypto. I'd like to declare them in some way, so in the future I'll be fine in case I want to sell them in the future. What would be the possible options for me? Should I declare them directly in the new country? Would that be problematic? Okay, so I'm going to try and avoid giving specific here, but in Europe, crypto regulation is something that is kind of under the microscope right now in different countries. Spain in particular has put increased focus on cryptocurrency over the last 2 years, and they're now eligible for capital gains tax when it comes to doing your tax declaration in Spain. In terms of declaring whether you have crypto in your portfolio or not, this will very much depend on a country by country basis. I'm not sure exactly how this works in Italy. In Spain, if I understand correctly, you do have to declare it, but only as part of the 720 model, which is when you have assets that are outside of Spain for greater than 50,000 euros. That's my understanding, I could be wrong. As a general rule of thumb, I would say as much as crypto is decentralized, at the end of the day, the government can do what it wants. It can impose rules, regulations to oversee cryptocurrency. If you have your crypto, just comply with any government regulation. So let's see what people think about this. So one person says you only have to declare the income when you sell and realize the profit. If you're just holding, you don't have to do anything. To which someone else then comments, not true in Italy, at least at the moment, until new legislation. They're talking about it, but nothing yet, that they will consider crypto the same as stock and you'll pay on capital gain. Right now, is like foreign money and needs to be declared as such. So you can see, one, how it differs by country, and two, that cryptocurrency is not necessarily considered an asset within your country of residence because it is a digital asset. So there's not really a lot of comments on this one. There is a comment from the moderator though saying cryptocurrency has been characterized as a speculative bubble by many well-respected finance figures. Currently a highly volatile investment, could crash to zero at any point. Perform sufficient research into the coin you're considering buying prior to making a purchase. The future of crypto is uncertain, so please do not take advice from anyone suggesting that you're guaranteed to earn a profit. Always do your own research before making any financial decision. Good advice, of course, and particularly relevant when it comes to crypto. As I've talked about on the channel, I do see some upside in crypto. Probably there is a future in it, but of course there are a lot of scammers out there as well. So do be very, very careful when investing in crypto. Okay, this is a question about debt and financing a PC purchase. So poster says, hi peeps, the thought of financing is a no-no to many, to me also at some times, but I'm going to be moving soon and the time to upgrade my PC is here. In brackets, I game and produce music. The thing is that I have a bit saved, but I don't want to spend it all on a single purchase as I would prefer to keep it for a property in the future. I was thinking of financing some parts and like that I would still be able to save my 1K a month that I usually do. Okay, I know that I will probably spend around 700 euros extra in total, but at least I won't spend all my savings. What do you all think? Is this that stupid or manageable? Okay, so I see the original poster's dilemma here. So clearly they want to save for a property. That's a financial priority for them. But at the same time, they produce music and they game. Whether it's their full-time profession or not, we don't know. But we can imagine that they do it to some kind of high enough level that spending a lot of money on a PC would be a worthwhile investment for them. So generally speaking, from my perspective, when it comes to something like this, I would be against going into debt for a computer. I personally would rather have the money paid in cash. Yes, that's gonna hit, it's gonna hurt when I make that purchase, but at least I'm not gonna be paying any interest or additional cost to acquire that PC that I'm buying. And so even though if they go into debt, they'll be able to continue investing at a close to usual rate, which they say in the question is about €1,000 a month. Very impressive, by the way. Personally, I would rather just not have the debt. I'd rather take from my savings, continue investing, and not have the additional cost when I'm acquiring my PC. Now, the interest rate situation in Europe is somewhat beneficial for savers, as we saw when we looked at the deposit and savings account question, but not so much so if you're a borrower, because the interest rates on borrowing are particularly high right now. As much as this person wants to continue investing, probably the return they'll make on their investment may be close to or possibly even below the interest rate on their debt. So in my mind, it's better not to go into debt, particularly if they have the money and they can just take it from what they're saving for the house. All right, let's see what other people are saying about this. First and foremost, you should have a safety buffer, so obviously do not spend all the money you have. But if you have money laying around, it makes no sense to finance a current purchase in order to have money for a planned future expenditure. When you buy a property, you'll have to assess your financial position, and this will look no better if you have some money, but also debt, or just having less money. It's pretty much the same thing. Then again, for sake, do not finance a computer. Okay, so this person has the same opinion as me and also raises another point exactly. If you go into debt for the computer, then it's going to be on your credit record. So if you're still trying to pay off that computer, if you still have debt while you're making your mortgage applications, then of course that's going to go against you on that report. Someone says at what interest rate? If it's not too bad, then why not? OP says, I was thinking of using Klarna. Don't know how much the percentage will be as I never used them. They are not available in my current country, but they are in the country I'll be moving to. Which people point out that Klarna, generally afterpay services, yes, have very, very high interest rates that kick in if you miss a payment. And I'm definitely not a fan of afterpay services, so standing by my original comment. Okay, we'll do one more. I'm really enjoying this and I could probably keep going on. By the way, guys, if you're enjoying this and you want to see more videos like this, leave a comment and let me know. I'd love to hear your thoughts on this video. So this question is about where and how to start investing. So I'm not going to try and read all of this. I'll try and summarize it and explain. So this is basically someone who's moved from South Asia to Germany with their spouse. They want to settle down long-term in Germany. And they're trying to look at how to get started investing. What they describe basically is that they're looking for some short to medium term investment options. Because although they want to stay in Germany long term, they mentioned that they might want to buy a car or they might want to move apartment. So they don't think that they should be investing in the long term yet. They basically want to have something that will generate them return on investments that's accessible in the short to medium term. And they're asking for recommendations and suggestions. So in order to give my opinion here, I'm going to make an perhaps incorrect assumption that the person has an emergency fund, because this is something that you should always start with, of course, is making sure you have enough to cover your basic needs in case of an emergency. So assuming this person has that, then I don't see any reason to not start investing long term. Because if you want to move apartment or you want to buy a car, you can save for that at the same time as investing. Depending, of course, on what your monthly income is, what your savings capacity is, you can always produce an allocation of those savings. Let's say, for example, this person saves €400 a month. They could say, for example, okay, I want €300 to put aside for short to medium term needs, and I want to put the other €100 into long-term savings and investing. So let's say we can take that approach. What they can look for, we can go back to raising again, as I mentioned earlier. They can find an easily accessible high interest savings account on there, perhaps, where they could put their money in so that they can access it in the short term. And for the investing portion, of course, there's a range of brokers available across Europe. I've talked about them on this channel, my favorites being typically Interactive Brokers, Trading 212 and DeGiro. Sign up links in the video description. So that's my opinion. I think they can do both at the same time. It's just a question of how much they want to allocate towards short to medium term needs and how much they want to allocate to long-term needs. And I say they can do it because I think they're planning on settling long-term in Germany. If they're not, then this will maybe be a different story. Okay, let's see what the comments say in any case. Down here, there's a discussion between one Redditor and the OP, basically talking about what is short to medium term for them. what is their time horizon, where someone mentions German government bonds as a possible short-term solution. And basically the person summarized it as, there is only one rule in investing: never invest money that you need ever. And though I might not phrase it exactly like that, I get what the person is trying to say. What they're trying to say is, if you're going to need this money in the short to medium term, then it shouldn't be money that you invest, which is, a good suggestion, I would say. Someone recommends the Finanzen Reddit, which is, I guess, the German-specific sub. You can see down the side on this sub, by the way, that they actually have regional personal finance subs, so by country in the EU, where you can talk about things specific to that country. And if you'd like to see me look through some of these country-specific subs, leave a comment as well and let me know, and I'll happily do that video. Okay guys, we're gonna leave it there. I had a lot of fun doing that video. I really enjoyed looking through different people's situations and finding out what is on people's mind when it comes to money for people living in Europe. Leave a comment and let me know, guys, what did you think of some of these situations? What did you think of my suggestions, other people's suggestions, and would you like to see more videos like this? Till next time, I'll see you on the next one, and let's get this money.